Hello, I'm here today with Ian Delahunty, President of TransAtlantic Petroleum. Ian, welcome.
Hi, thank you for having me.
Could you tell us a little bit about how you're using North American technology in your Turkey and Bulgaria programs?
Sure. We've been the first in Turkey to drill horizontally, which is a drilling method that most people associate with unconventional reservoirs, particularly shales in the United States. The truth is, horizontal drilling is fantastic in terms of delivering better well results for conventional and unconventional plays, not just shales. And so we're currently drilling horizontally in our Shelmo oil field, which is a dolomite reservoir. We're drilling horizontally in our Gaksu and Mola fields, and we're drilling horizontally in Trace Basin as well. The second component of what people typically identify as new technology coming out of most of the active unconventional plays in North America is the use of 3D seismic. We've taken a big step in 2013 to appraise the discovery regions around Mola and Gaksu with 3D seismic. In Bulgaria, we're drilling our first exploration well into a dolomite Jurassic play, and there we also reprocessed existing 3D using a fairly common technique, again, born out of higher active markets.
Now, you're currently in the middle of a $120 million program. How's that going along? What have the challenges been that you've faced?
Well, the biggest challenge has been what is actually our biggest opportunity. When we discovered oil in the deep Paleozoic on the Bahar well, and when we discovered oil in the Cretaceous with Gaksu 1, we determined very quickly that we needed to build our teams around those plays. And those plays are either tight and require fracture stimulation, or they are fractured carbonates and require horizontal drilling. So we made a very swift move to center the company's talent base in Dallas, Texas, and we've hired predominantly technical expertise out of the major producing basins in mid-continent, and that would be the Eagle Ford shale play, the Haynesville play, the Piceance. And so we consequently took 6 months off, roughly, in the first half of 2013. We drilled only 6 wells in the first 6 months of the year, which was probably a low, actually, for modern-day transatlantic, and have really backloaded our drilling program. And that was done specifically to redesign and implement better horizontal drilling techniques, better reservoir characterization. And we've seen the results of that. Most of the wells we fracked in Trace Basin this year have been very successful. We feel like we've done a very good job of identifying the producing intervals in Trace Basin. We drill with phenomenal results when we're in the Mazardere and the Teshemkoy sands, and we plan to continue to drill horizontally in that basin. In the southeast, we continue to appraise the 3D seismic, which we are currently shooting, and we've been successful at drilling horizontally in Shelmo, which is a big development for the company. So we've seen a pretty significant ramp up in activity in the second half of 2013, and that has shown in our production as well, which has grown significantly since the first quarter of the year, and we plan to continue that into 2014.
Now, your company's efforts seem to be mainly focused on Turkey's southeast oil fields and the northwest gas fields. What are your current priorities in those areas, and how do they differ?
You know, we spent the better part of the last 5 years identifying the key basins in the country of Turkey, and have gone from owning a very large swath of exploration acreage to what we think are the best opportunities in the country. And again, we see that in our well results today. So, you know, to briefly describe our strategies in Turkey, we have a 3-part growth strategy. The first is to monetize the Trace Basin, which for us is drilling horizontally and frac stimulating the Mazardere and the Teshemkoy in Trace. Our second growth strategy is the Shelmo oil field redevelopment. We've taken the existing 3D of Shelmo and built a much more comprehensive static model with which to tie into material balance, which is essentially how much fluid the reservoir has produced historically. And we've determined that Shelmo is probably at about half of its potential. So Shelmo's got a lot of life left in it, and we plan to do a pilot program after finishing our primary recovery program through Q3 of next year. And are very, very excited about the results of the modeling of Shelmo. Really think that there's a lot of opportunity there for re-engineering and particularly secondary recovery going forward. Our third growth strategy is the Mola exploration acreage surrounding the Bahar discovery and the Gaksu discovery. These are wells that we drill for $2 million, which have a net present value of $15 million. So for us, it's critical to be able to define where that opportunity exists. And once we've defined that with the use of 3D, we'll be very aggressive in pursuing those plays.
What key message would you like to give any potential investor?
We're trading at 50% of our approved reserve value and have a huge amount of opportunity for growth. So I think we're a fantastic investment. I think we're poised for very commercial growth, and I think we've got a lot more to do with our current asset base.
Ian, thank you very much for joining us.
Cheers, thank you.
If you'd like any more information, please do visit the Edison website.